Good afternoon. Welcome to the market segment. Asian stocks followed Wall Street's cue with all indices up on the day. They're said to have been driven by new data showing a weakening U.S. jobs market. The Bureau of Labor Statistics revised down the number of jobs created in the 12 months ended March by a whopping 911,000, indicative of the U.S. economy slowing more quickly than initially thought, and thereby driving the expectation for Fed rate cuts this month. The Nikkei share average advanced by 0.87%. The Hang Seng Index rose by 1.01%, while the Shanghai Composite Index gained 0.13%. Looking at U.S. markets, we see that stocks there continued with their upward momentum with record closes yesterday. Buoying markets continues to be the expectation of a rate cut coming out of the U.S. Fed next week. Meanwhile, futures are pointing to a positive opening on U.S. markets when they open later today. The Dow Jones Industrial Average gained 0.43%. The S&P 500 rose by 0.27%, while the Nasdaq Composite Index advanced by 0.37%. Looking at local markets, we see that the All-Share Index is currently trading up 0.1% at 103,278 index points. The Rand is trading at 17.56 against the US dollar, 20.55 vis-a-vis the euro, and 23.78 against the British pound. Looking at commodities, we see that gold is trading at $3,656 an ounce, platinum at $1,396 an ounce, and Brent crude oil trading just 10 cents shy of $67 a barrel. All right, let's get into it now with Chantal Marks. She's the head of equity research at F&B Wealth and Investments. Very good afternoon to you, Chantal. So global and local markets are trading in positive territory, and it seems to be the same old theme driving things at the moment. That is the expectation of a cut in rates. But let's say that there is an interest rate cut come next week. What's going to be the next catalyst for markets?
Yes, so I do think that the interest rate cut next week is now more or less priced in. So market participants are expecting that to come through. I think the focus is going to be on the commentary surrounding that cut. Are we supposed to expect further cuts going forward? And I think that will probably dictate market direction. But outside of that, there's also this AI thematic that is driving markets at the moment. Oracle last night released very strong results and very upbeat guidance, and that share price was up 28% in aftermarket trade. So the AI thematic is going to remain front and center as well. And also geopolitics. Any advancements in terms of an improvement in the geopolitical situation could also be a potential catalyst for markets.
So yesterday's Q2 GDP number was a vast improvement on Q1, rising by 0.8%. But when we look at the detail, the fall in private sector investment by 1.4% was disappointing. What's your reading around, the private sector's lack of investment in the economy, and to what extent are current reforms going to help perhaps reverse this trend?
Well, it certainly is a crisis of confidence that has led to fixed investment coming under pressure. And fixed investment, in fact, has been under pressure for quite some time. I think as soon as investors start feeling, or the private sector starts feeling better, something kind of happens to derail that. I think the most recent derailment of private sector confidence has actually been externally driven rather than internally driven. So the chaos that we're seeing on the trade front, on the geopolitical side, making business owners and managers a little bit more conservative in terms of approaching longer term investment. I think there are internal things that can change that. Certainly the reform agenda is rolling along, but we'll need to see an acceleration in that, particularly now as we're looking to counter everything that's happening outside of South Africa's borders as well.
So gold player Pan African Resources, they released their annual results for the period ended June 2025, and they're reporting that their all-in sustaining costs stand at $1,600 an ounce, while the gold price is now way above $3,600 an ounce. How was their performance in the period under review?
Well, their performance was really strong. I think the only thing that really hampered the performance was the fact that they had certain hedging contracts in place. And now with a hedging contract, it basically means that they lock in lower gold prices for their product. So it wasn't as strong as it would have been if they didn't have those contracts in place. But from what we understand, those contracts have now fully expired. And given their really favorable cost base, as you just mentioned, things should start looking a lot better for them going forward. It was already very strong in the period under review, but now they can fully benefit from that really high gold price.
And what does the runway look like for the gold price? Does it still look like it could flirt with even higher levels than we're seeing right now?
Yeah, I mean, when we're looking at the drivers for the gold price, central bank buying has been front and center. And as long as there's this geopolitical volatility and uncertainty, particularly now that we're talking about secondary sanctions surrounding Russia, secondary sanctions specifically possibly aimed at China and India, central bank buying isn't going to go away soon. I think most countries want to diversify away from only having a hard US dollar exposure, and gold is a really nice alternative for that. Coupled with a lot of nerves in markets, you could continue to see institutions holding onto their gold and retail investors perhaps entering the fray as they're also looking to benefit from potential continued upward momentum.
Chantel, always great speaking to you. Thank you so much. That was Chantel Marks. She's the head of equity research at FNB Wealth and Investments. Of course, at the top of the hour, Mfundo will have more news for you. And we are now going to leave it to our colleague Mpo to give you the weather details. A recap of our top story: tensions rise as police fire rubber bullets at protesters in Westbury in Johannesburg. Residents have blockaded roads, saying they have been without water for too long and their complaints have fallen on deaf ears. As you can see on the screen, the lotto jackpot now stands at 20 million rand. A chance to win that tonight. Your weather details coming up next. And of course, as I said, Mfundo will have more for you at the top of the hour. Have a great afternoon.